Patrick Karim from badcharts.com and a contributor to the Silver Chartist joins us today to take a look at what's going on with silver and more on this week's edition of Metal Money. I'm your host, Patrick Vieira. Patrick Karim, welcome back to Metal Money. How are you doing?
Hi, Patrick. I'm doing super. Thanks.
All right, glad you're doing super. I got to ask you this: with silver being more present, more front and center, and seeing the continuous monkey hammering going on, it's been a rough toll. Definitely a rough road for silver bulls, and specifically the last month or so. And you, my friend, even tweeted out on March 2nd, I'm honestly turning bearish, guys. But Patrick, are you leaving us? Have you given up on silver? And what prompted you to tweet you're turning bearish on silver? And are you?
I'm not bearish at all, Patrick. For me, the landscape, the landscape has not changed. We have not had a Paul Volcker moment. Everything's still in motion since the Powell pivot in like 2018. So everything's intact. Everything's noise on these time frames. The market just needs time for whatever building blocks has to be put in place for human psychology to accept. Okay, gold's been oversold, silver's been oversold. It's time to move up. But that tweet was just me almost like venting, can I anti-jinx it? Because of some of the rallies, sometimes like the silver squeeze rally and all those, I was, guys, to the moon, or we're going up. And I know I have no impact on the price of silver, but it's like I felt like I was jinxing it all the time. So I said, guys, man, this flip the script a little bit.
The contrarian jinx, I can definitely go for that. Patrick, currently silver sits around its 100-day moving average, and it sort of looks to jog around in that area. What are your charts showing you? Will silver head south to its roughly 24-20 200-day moving average, or will it trek upward more towards its 26-47 50-day moving average short term?
Well, silver, until it does, it beats its monthly defined new highs of its consolidation. So until it closes above 28, 29, it's always going to be susceptible to have drawdowns. But as long as the monthly closes, we keep doing higher lows, and we don't close below those levels, like you mentioned. For silver, I drew some lines in the sand. If I fine-tuned I think it's this 18-month moving average for silver. If we have a quarter close below the 18-month moving average, where now it sits at 21, it's not going to look good. Where it's going to be the first time in a bull market that the silver closes below an important moving average, where it needs a lot of time to consolidate and recuperate, or even could be the beginning of a bear market. So for me, my low watermark, it's a quarterly close below 21 for now. So all the rest, these smaller time moving averages, if the correction drags on, we could dip below that. But for me, it's I still consider that noise, considering the macro of the whole precious metals market is in a bull trend. Same thing for gold. For gold, I had a quarterly close below 17. I forget the number, 1730. We have to close like March above that, or else that would be the first time in a bull market that we actually close below that 18-month moving average there for those precious metals. Okay, so it's all noise for me until there we close a quarter close below 21 there. We could dip, could close higher. It could just be a wick on the monthly, on a weekly chart. Silver does that over and over again.
Patrick, you posted a chart earlier in March referring to how silver had never failed to reach its all-time highs after gold does it first. Should we be confident long-term, being that gold hit its all-time high back in August of 2020, and within 40 months, silver will hit its all-time high by or within 2023?
This is the monthly chart. So whenever gold did a new monthly defined high, it reached a previous high. Silver never failed to do the same. And after that's a question of calculating the time on each of those previous occasions. How much time did silver take after gold opened the floodgates? And it had a range from 5 months to the worst case was the bull run, which was interrupted by the GFC in 2008, where it took actually silver 40 months after gold did a new all-time high for silver to hit its all-time highs. And right now we're 9 months in already. Don't know the future. That just gives us like a range, and depending how the chart construct happens, if we have another great financial crisis or any hiccups along the way, or how fast the Fed's going to do augment monetary imbalances to prop up the nominal U.S. equities, how that's going to drive up the PMs. So there's a whole bunch of factors like I have no control over that. Some even questions I didn't even ask myself maybe that I should. But for the price action, based on previous history, where it's a time bomb. So I say TikTok because right now we're 9 months in, we're consolidating in the pull flag pull type of pattern right below important breakout line at about $30-29 silver, and that's why you never know when silver is gonna decide to say, okay, it's time to move up and catch up and do my all-time highs.
Looking at another chart you posted on Twitter, the silver historical monthly log chart, can you explain what the true strength index is and its significance? And can you walk through that chart with us?
So technical analysis always, you could look at the price action, but then after that, you could add an indicator. It could be any indicator, stock, MACD. And for this one, I put true strength index. And my goal is to see how did silver behave when certain patterns, certain energy was built up, let's say through the indicator, through the true strength index, and to augment my chances or add evidence that, yes, we are in a bull power zone. Silver will, even if it's consolidating on the weekly or monthly timeframes or daily timeframes, do we have enough juice or power to bring the price action higher? So this is the super duper long silver chart. And we've seen every time the TSI started below zero, so oversold, nobody wants silver, it's forgotten, and it was able to power up above into the box. So I've identified the box, I call it the fun zone. So if ever it went through that, then I measured how high silver was able to perform. So in the 60s, it was able to get 171% once that signal was confirmed. And in 73, early 70s, it did the same thing. Nobody wanted it in 70, 71. And then it went up, had enough momentum. It did 120%. And then the second half of the 70s, it did 511 or 500. It even overshot on the smaller time frame. So that's just like on a monthly close basis. So it went up like $30 in the late 70s. And after that, the whole 1980s, it did go up above that zero line sometimes, but it didn't go up into what I call the fun box. So momentum creates more momentum, and you want to ride that trend. In the 80s, you didn't quite have it, even if we had the bear market rallies within that. And then in 2004, we had that signal. We went into the fun box, and we had a 255% move. Then it dipped back, and then it went back into the fun box, another 94% move from 2010 October to 2011 highs. And right now, Pat, we just had another uber bullish signal. The TSI doing higher lows below that zero line, coiling up, really like all that energy of those years that it wanted to go up, that it didn't. Right now, it's exploded up above the zero line. That's the first criteria, and then into the fun zone. And if every time previously we had that type of setup going into the fun zone, we had some important gains. So now we're just entering it. So you could add a range from 94% to 500% move that's going to happen right now that we could expect for silver going forward from this stage, not from the March lows, but from the value that we have right now, $25, $26, $27. You could add up another 94 to 500% on top of that as a possible range of targets there that we could run into.
Patrick, also in early March, you tweeted, I wonder how many more bullets the US dollar can avoid before taking a fatal wound. And since that time, the dollar on the DXY has moved from the high 89 levels through the 90s, now sits in the high 91 levels, looking strong, like it might even go into 92. What factors are you seeing currently happening to push the dollar higher, and will it continue to rise short term?
Well, the dollar, it was the rates going up are probably helping the dollar attracting new customers. And it was also it's at a critical. I had another chart that I did that had the dollar on the 6 months chart going back all the way to the 60s. And 92 or 90 to 92 is historical equilibrium price for the DXY, where it's pivoted a lot of times. Every time it hit it, it was considered resistance. It went under. When it went up, it was considered support, and then went up, it was considered resistance. And right now we're right smack on it, super tight. And for me, for the US dollar to say, okay, it's going to need it might go sideways, or the bearish case is put on hold, is if we get a 6-month close. So that means a Q2, so a June close above 92, then I'm going to say, okay, it managed to close back above this historical defined resistance. And then that's going to become support. So now it's going to be hard for the bears, because now every time the US dollar is going to touch that 92, people actually want to buy it. But until then, right now, I still consider whatever happening is noise, and it's going to keep fluctuating around those levels. And I think it's going to decide around June, end of June. Then we'll know the clear picture for the DXY if it put in a low, and then we could move on from there. But until then, even on the smaller time frames, I had it's still below important trend line breaks, going under. Now it's going to retest those breakout lines. So it's kind of early to say. For me, it's still in the downtrend, but it is fighting its way back up. So you got to take a step back and see the actual big picture for the DXY, and that has been lower highs since the 80s. So since we had those high Fed fund rates, the US dollar has had rallies going up, but they've always been lower and lower and lower. So we got to keep an eye on that and adapt our analysis there as the chart morphs.
Patrick Karim from badcharts.com. We appreciate the time you've given us, and we're glad you're still on the silver team. Hope we can do this again soon.
Thank you, Patrick. Take care.
There you go, a chartist take on silver and where it's headed. As always, leave your comments below, and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.